In this video, I will show you one daily candle strategy that you need to quit your job. All right. After you've learned this strategy, you will be able to trade profitably daily in the Forex market and be able to quit your job if you wish, because you'll be able to make consistent profit from the Forex market on a weekly basis. The purpose of this video is to show you how mastering the daily candle close strategy can significantly improve your trading results. I've made videos on daily candle strategy, but in this video I'll be going more in depth and showing you live chart examples that will help to drive home that this strategy is very lovely strategy. Okay, now you need to understand the candle anatomy before you can understand this strategy. For the candle anatomy, we have the bullish candle and the bearish candle. A bullish candle opens right there, okay, and trades low, okay. Then after it has traded low, what happens is that it trades right up, okay. After trading right up, it makes its high and now closes dry. What happens is that the market opens this way for a bullish candle and now trades low, makes a high, okay, makes a high, and now comes down to make a close. The market open, trades low, okay, trades high, and closes. Okay, now but for a bearish candle, the market opens, trades high, trades low, and closes. Okay, and that it can be depicted here. For the bearish candle, the market opens right there, trades up now to make a high, now trades down, okay, to make a low before it now closes at this point. That is to say, the market opens right there, trades high, trades low, makes the low of the day, and now closes right there. So that is the difference between the bullish candle anatomy and the bearish candle anatomy. You need to know the open, the low, the high, and the close for a bullish candle. And now for a bearish candle, you need to know the open, the high, the low, and the close for a bearish candle. So if you've understood this, we now move into the strategy. So the daily candle close strategy is based on taking trades from the zone around the intersection of the previous day's candle close and the current day's candle wick. As simple as that. Okay, taking trades from the zone around the intersection of the previous day's candle close and the current day's candle wick. Okay, now for a bullish scenario, you have the previous day's candle. This is the previous day's candle, and this is the current day's candle. Okay, now what you need to do, when you've identified your previous day's candle, what happens is that you mark the candle close, because the market opens right there as we saw just in the candle anatomy, trades low, makes a high here, and now closes here. So you mark this candle close for the bullish, and now the intersection here, you just mark the intersection of the wick right there. Okay, and then you're expecting that price would come to this zone, and buy from here. Let us see. So you can see right there the market would come to this zone around the intersection of the previous day's candle close and the current day's wick, and we're looking to take a trade from there. Now for a bearish scenario, this is the previous day's candle, PDC, previous day's candle, and this is the current day's candle. Okay, now we are looking, this is the candle open, the candle high, and now the candle low, and as well here the candle close. So now we are putting a horizontal line here, marking the candle close of the previous day's candle close and the intersection of the wick of the current day's candle, and this forms our zone from which we want price to come into, and we take a sell trade from, as I have depicted here. Okay, I'm going to show you right now in the chart. We're going to go into the chart to see how this works. For the trading rule, trade timing is from around 9 a.m. to 3 p.m. London time, which is equivalent of 4 a.m. to 10 a.m. New York time, is when we are looking to take this trade from, to mark our zone before that time. This is mostly from my experience when this setup plays out. Okay, now the entry area is at the pullback to the demand or supply zone created at the current day on a lower time frame. Okay, which is about, the entry period is about the intersection of the previous day's candle close and the week of the current day. Okay, and also for the entry method, you can use the smart money entry confirmation method or any reversal chart pattern strategy. Okay, the stop loss is like few pips outside the refined or unrefined supply or demand zone. Don't worry, we're going to go into the chart right away so you can see how that works. So for the take profit, for the buy scenario, you target the high of the current day's candle, and for a sell scenario, you target the low of the current day's candle. All right, so and you might want to break even at 1:1 risk to reward ratio. Okay, so now let's go into the chart. This want to see this bearish example of this strategy on USD. So now we're on a daily time frame, and we want to actually see how these two overlapping candles, how they played out, because this is the previous day's candle here and this is the current day's candle. Okay, two bearish candles. So want to see how they actually played out. Okay, so now we would do our markings. Let's place a horizontal line. This is the candle close for the previous day, candle close. This is the candle close for the previous day. Okay, and now this we now also mark our, we place our rectangle, okay, on the week of the current day's candle. Okay, the candle close of the previous day and the week of the current day's candle. So let us use the replay button to cut out the current day on the daily time frame, and we'll now step down to the lower time frame to see how the setup would play on the real market, on the live chart. Okay, now we have we're already left with the previous day's candle. Okay, we are left with the previous day's candle, and now we want to see how this current day's the current day candle will be played out on the lower time frame. So now we step down to the 15 minutes time frame. Let's step down to the 15 minutes time frame. So on the 15 minutes time frame, we have this zone. So what we are looking at, we have this zone, and we want price to like come like this. Okay, sell down and now pull back into the zone. This could be some form of liquidity. Pull back into the zone and now give us a sell opportunity. So now let us use the replay button to see how the market would play. So this zone is where we're looking at to enter trade. So let us play. So the market, we're expecting the market to sell down and possibly give us some form of liquidity before we can have a zone marked out. Okay, let's just allow the market to play out, Good. So the market have played out. Okay, so you can actually see what happened right there. Liquidity opportunity created, and now the market came right back up into the zone, gave some form of entry confirmations right there, and sold there. Okay, and sold. So you can see this strategy played out. Okay, the market strategy played out. So this was liquidity created. This was from where we took we do the replay. The market gave us liquidity here, sold down, and now came back into the zone. And now you can see how the market sold to this point before the market closed. Okay, so this is the sell scenario of the strategy. So if we go back right now to the higher time frame of D1 again, you can see that the candle would have formed. The daily time frame would have current day's candle would have been formed. Okay, the market has formed the daily time frame current day's candle. So that is how it was done. Here the market pulled back on the lower time frame after at the intersection of the previous day's candle and the current day's candle. Okay, so we're going to look at the bullish scenario of this strategy. Now let us look at this example from the chart. This is USD CAD. Now this is the daily time frame of the USD CAD, and if you can see here, let us see this candle, the last candle that was printed. Let's see this section. Now you can see this bullish candle, these two bullish candles, 2 consecutive bullish candles. Let's see how they were formed. This was the previous day's candle, and this is the current day's candle. And let us see if there was a setup. You can see here what we are looking at. This section, the intersection of the candle close of the previous day's candle and the wick region of the current day's candle. Let's draw a rectangle there. Let's do a candle replay and cut out the current day's candle so we can now know. So here you can see we are left with the previous day's candle. So we'll move to the lower time frame, like 15 minutes time frame, so that we can see how this current day candle was formed and how, if there is going to be a setup for us. So we go to the 15 minutes time frame. At the 15 minutes time frame, this is what we're going to see. So this shaded area is the zone we are looking to take our trade from. What we are looking at something like this. If we can have the market move up and now pull back into this zone, give us some sort of entry confirmation, and then so that we can actually take a buy trade. Okay, just stay with me. So let's just play and see how that works out. Okay, let's play. So the market is going right up to form a zone. So the market has already formed a zone for us. Okay, a zone has been formed. So the market goes up. So the market has gone up, is going up rather. So we want to take a trade from this section. We want the market to come down to this point and take, so we can take a buy trade. So let's continue the replay right up. Okay, so you can see here we have the market the market has created a demand zone for us. The market has created this demand zone for us, and you see as a shaded area on the higher time frame, D1 time frame, daily time frame is where we're looking at. So we want the market to come back here, give us some sort of entry confirmations, and then we'll take a buy trade from there. So let us continue to do a replay. So the market is coming right down. So the market has come right down. Okay, the market came right down. So if you step down further to like 5 minutes or 1 minute time frame, you're going to see some form of entry confirmations at this point that I've just marked. Okay, so let's replay and see. So the market now went further to the take profit. So you can see here the take profit region was smashed. Okay, take profit was smashed, and this is your stop loss will be just few pips below the zone, that your entry zone. Okay, and you can see liquidities we are taking out from here before price came down into the zone and we took a buy trade. So that occurred just yesterday. Okay, just yesterday before the market closed, just yesterday Friday. Okay, so you can see how this market played out. This is a very good strategy that can actually help you to make a whole lot of profits from the forex market. The daily time frame strategy, daily time frame candle close strategy is one strategy that can actually help you to amass a whole lot of profits from the market. Okay, if you are yet to subscribe to this YouTube channel, please do not fail to do so. Give this video a thumbs up, and if you are yet to join our free Telegram channel, kindly do so. The link is in the description box of this video. And you want me to take you by the hand to mentor you, to help you to become a very profitable forex trader, regardless of how many years you've spent in the market. Even if you have spent 10 years or 20 years in the market, but the most important thing is that you are not yet profitable, contact me. I will help you to correct your deficiencies. I will help you to become a better and a profitable forex trader for just a little consideration for a training, a one-on-one mentorship course. I've got several questions that I know you might want to ask on this strategy. You might want to ask these questions, so I've just written them out so that you can have them. So the question would be, what if the current day's candle has no wick? Okay, in that case, just look for a demand zone on a lower time frame below the previous day's candle close for a buy scenario, or a supply zone above the previous day's candle close for a sell scenario. Another question you might have might be, what if the previous day's candle is bullish and the current day's candle is bearish? Or what if the previous day's candle is bearish and the current day's candle is bullish? So in that case, no trade. So this is actually a trade continuation setup. So you need to ensure that the previous day's candle is the same with the current day's candle in terms of candle color. Another question you might want to ask is, what if price is ranging on the daily time frame? What to do? Now, no trade. It's a trend continuation strategy, and there is high probability that if the current day's candles is bullish and the previous day candle for the past 2 days are bullish, and the same principle apply for the bearish scenario. Now your fourth question would be, what if price didn't pull back to our entry zone on that day? It's as simple as that. We wait for the next day. There's endless opportunities in the market. Wait for the next day for that currency pair, or actually you can actually look to trade from another currency pair that has a good setup. Okay, now finally, or another question you might want to ask is that, what if price pulls back beyond the previous day's high for said scenario, or beyond the previous day's low? Okay, now you don't have to trade. It's far better to trade within the intersection of the previous day's candle close and the zone around the wick of the current day's candle. So there could be a retest if the price trades above the current day's candle wick. Okay, the current day's candle low. Okay, there's a high chance that the market would actually break out and retest and continue in the other way if the market trades beyond the current day's candle for high for a sell scenario, or beyond the current day's candle low for a buy scenario. Okay, so I hope that is clear. Okay, so don't trade. There could be a retest and continuation in the opposite direction of your intended trade. I hope this strategy is very, very clear. So if you found value from this video, please kindly subscribe to this YouTube channel. Give this video a thumbs up. Drop a comment on the comment section of this video and let me know what other aspect of trading that you want me to explain and do tutorial video for you about. So, and if you're here to join our free Telegram channel, do not fail to do so. The link to that channel is in the description box of this video. In that channel, I share fixed setup and analysis that you can trade profitably to make money. You can see this week I shared this setup, and you can see how this setup played out in the market. And if you want me to actually train you and help you, take you by the hand and help you to become a profitable Forex trader, even if you've spent 10 years, 20 years, or no matter how long you've spent in the Forex market, but you're not profitable, consistently profitable, I can help you to correct your deficiencies and to help you to become a profitable Forex trader for just a little consideration. Okay, do contact me. My contact detail is in my free Telegram community. Or like when you contact me, we can now know how I can be able to help you, to mentor you to become a better trader. Okay, and I don't do collective mentorship. I do one-on-one mentorship so that you can be actually mentored in a proper way that would align with your time, and also as well so that I can be able to train you at your own pace. Till I come away next time with another content, do have a wonderful day ahead. Bye.